what I'm going to do today is give you the guidelines and the tools to better understand your credit report and what is credit scores. As I mentioned earlier, it's a misunderstood topic, it's confusing, and we're afraid of it, seriously. That's what it is. We're afraid because we are actually not knowing what is it that needs to be done, how to get started, and normally we look for someone else to do it and we pay them for it. Well, we don't have to. We don't, seriously. If that would be the case, then I wouldn't be here today. And the other thing is that if there was somebody to fix your credit, then everybody would have nice credit. So there's no such thing of a quick fix. We have to work at it, please. And as of today, I need you to start doing it as a part of your finances, a part of your life, because it's a very important part, again, of your finances. Now here lately, your credit reports are being looked at when you're applying for jobs. So there's no way around it now. And I'll get into this here in a minute, okay? So let's get started. On page 4, so there it's telling you the history as to why these credit bureaus were developed. There's 3 credit bureaus: Experian, Equifax, and TransUnion. 3 credit bureaus. And I'm going to say it from time to time because here lately what you're hearing on TV and on commercials, those are services providers. They're not the bureaus. And with that, I wanted to tell you because they're not giving you the 100% accurate information. All right? So the reason these bureaus were developed because of technology, the growth of USA, and the movement that we have. So in the last 4 dots on page 4, you will see what's the benefit for us having these bureaus developed for us. So increase the access to credit. Decrease the time of credit granting. So when you're applying for a credit card, you pretty much know that they're going to approve you or deny you within the first minute or so, because that is how quickly they're doing it nowadays. All right? The other one, improve the mobility. The mobility will be such as you're living here today in Texas and next day you're in California, you need something in California, your credit follows you that quickly, again, because of technology, okay? The last one, access to consumer product services. That right there, it is because once a year, for the creditors that you have, they go into your credit reports and see how you're handling your credit, what you're doing with credit, the movement of it, and that's how it gets them to send you that pre-approved application. So that's what they're doing. They're looking behind the scenes at our credit, and that's what even from them themselves or other lenders, just to get some more business from us. They're offering you lower interest rates, a new credit card, a loan, a new product from what you have, okay? That right there, checking that credit right there, it doesn't hurt your credit scores. And I'll get into credit scores and inquiries in a minute, okay? Also, we are so focused on bettering our credit scores, but that's not the only component to your application. We feel that, oh, okay, I have 700, hallelujah, that should be granted that credit. No, there's other components into the application. Have you all heard about the 3 C's of credit? The 3 C's? Okay, so the first C will be capacity. The 3 C's of credit, capacity. So that one will be if you have been working regularly and you have enough income to support the new loan, the new account. Capacity. The second one will be character. Character. Have you used credit before, and how have you used that credit? Do you pay it on time? What's going on with that credit? Character. And the last C will be collateral. So collateral will be, do you have a checking account? Do you have savings? Do you have valuables? They want to see what have you been doing with your income. How do you invest that income? So they do take in consideration all these 3 items plus your credit scores. Not just because we have arrived. So we have capacity, character, and collateral. So page 5, how can my credit report be used? So on top of page 5, we have that how it's being used. The most obvious, it is for credit approval purposes. We recommend that when you're going to make a major purchase, such a house, a car, or a major loan, that you obtain your credit reports 3 months prior, all 3 of them, 3 months prior. Because what you're going to be doing is looking into your report, making sure that the information is correct, it's yours, and there's no identity theft going on also. Identity theft right now is one of the largest silent crime going on, and if you're not looking into your credit reports, it could be happening to anyone right now. They're even using our children's social security numbers out there. So we have to be on top of things and start looking at our credit reports at least once a year, all 3 of them. So right now, for this purpose of the purchase, 3 months prior, because again, if you have to do a dispute, it takes about 30 days to resolve that dispute. And then if you're not happy or satisfied with the answer, you still will have to continue to dispute. So see, you're running out of time. All right? So credit approval purposes, anytime you submit your application that you're needing a loan for a car, a credit card, a house, anything, your credit is being checked, credit approval. As I mentioned earlier, for employment purposes, it used to be for financial officers, for bankers, for public people, realtors of that nature back in the day. And within the last 3 years, it's becoming more and more of the normal for our credit reports to be checked. And this is how you'll find out. Yes, the normal is that we submit a resume, okay? But when they call you for an invitation for an interview, they'll have you fill out their own application. So on that application, you'll see a sentence or a paragraph telling you that they will obtain your credit report. And once you sign that application, you have given them permission to do so, okay? So that is just an added component to our resume as to how responsible we are and more information about our character. When they're pulling that credit report, it does not hurt our credit scores either. It doesn't hurt. It's a soft pull, okay? So that's for employment purposes. To underwrite insurance, when you're buying car insurance or home insurance, it could be, and they will tell you, that they're going to be a pulling of your credit report. They cannot deny you a policy or cancel your policy because of the information on your credit reports. That's a no-no. So keep your ears open that if they tell you, oh my God, I can't renew you or I can't give you service because of the numbers you have, that is a no-no. What they should be looking at is, again, responsibility and how you handle your bills. That's what they should be looking for. So, and it tells you there that if there's such thing wrong or something that you still have questions about or not on the up and up, you can contact the Department of Insurance in your state. Do a search, okay? For professional licenses, just as I mentioned earlier, it used to be for policemen, nurses, real estate agencies, agents, and so on. For a court subpoena, I have never heard of it personally, but I guess it's important enough to be written in print. So if you hear of that, yes, it can be done. For IRS, yes, IRS. We know a lot of IRS, right? So yeah. IRS is not a collector, but yet if you owe them and you have not worked a payment arrangement to their satisfaction, they will report it to the credit bureau. And also when you're looking for that payment plan, IRS will check your credit reports. Because if you say, for example, that you owe them $5,000 and you want to pay $50 a month, IRS wants to see what's keeping you from paying more on that account. So they see that you're paying to Best Buy $80 and you pay Macy's $120, IRS is not going to sit back and wait for that $50 to come in. So that's what they're looking for, okay? For review of collections, for the products itself, or collectors can look at our credit reports too, all right? On page 6, where do creditors where do credit reporting agencies obtain information? Such as your personal information, your name, your address, your place of employment, your phone number. Where is that being obtained? It is from us individually, when we submit the credit application. So it is very important that when you're submitting your application to be writing clearly and consistent with your names. Because as you write different names on the credit reports, have you seen them yours? It creates another alias in there, aliases. And when you're going in to buy a house or a car, something very important, some of the lenders stop and take a look at that, and they would have to do a search on those other names too to see if there's anything out there under that alias name, okay? Anything that is 5 years or older in there, such as your addresses or places of employment, that needs to be cleaned out. Your phone numbers, if that's not the correct phone number, that needs to be cleaned out. And guess what? It is our responsibility to do it. You have to do it, not the credit bureau. That's why there's information there so old and sitting there, because we have not done it. So depending on which credit report you're looking at this information, that's where you're going to do that update. Addresses, phone numbers, and employment. If you haven't worked there more than 3 years, hey, that needs to go out. Clean it out, okay? The other part is saying creditors. That's what the creditors report to the credit bureau themselves. They are the ones submitted this information to the credit bureaus. The public records, that right there, it is the credit bureaus themselves. They have a person or they have reports, and they get them into the bureau, and then they put it into the pertaining files if somebody has a judgment, lien, bankruptcy, child support, IRS, all that information goes there. But it is the credit bureau looking for that information. That's how they obtain it. It's a public record. It's at the court. If you wanted to take a day off from vacation and just go sit at the court and look what your neighbor's been doing, you can probably find out. Seriously. Yeah, I mean, now you can do it online too. Huh? We look at people's next doors, how much they pay on taxes and so on. Yes. I'm telling you, technology is scary. Page 7, inquiries. So here we get into something that you are a little confused about. Inquiries is when they check your credit report, okay? And here lately, well, not lately, I'm sorry, 10 years ago, let's say, you heard and learned from your parents or from your someone that every time they touched your credit report, it was going to hurt your credit scores, huh? So we learned it. I see it. Yeah. And now we say, don't touch it, don't breathe on it, because you're going to hurt my credit scores. Well, somebody's listening. That's why we have to stay on top of our credit reports, because things do change. They're not set on stone. There's a lot of things that change also with credit. So here, for us, in a benefit, they have developed the external inquiry and the internal inquiry. External is also known as a hard inquiry, H-A-R-D. And that is every time your credit is being checked. And the internal is the soft inquiry. Okay? So on the soft inquiry, every time you look at your credit reports, it's not going to hurt your scores. For employment purposes, it's not going to hurt your scores. For insurance purposes, you have to ask now, ask them, is this going to be a soft or a hard inquiry? If it's going to be a hard inquiry and you're not ready to deal with them, say, wait a minute, because I'm still looking around. But if you're ready, go ahead and give them the permission. So that's for the soft inquiry, behind the scenes, that for the promotional items, it's not hurting your scores. For someone just to look at the credit report without you have submitted that application, it's not hurting your scores. And I said, for you also, as many times you want to see your credit reports, it's not hurting your scores. So the most obvious and the most hard one will be that external. Inquiries fall off your credit reports 2 years after the print date, your inquiries. Okay? Now let me backtrack in the inquiries, the first paragraph. Yes, we also learned that when they were checking our credit for buying a house or a car, and mainly a car, it is that it's drawing your credit scores down. Yes, it is true because each lender is pulling your credit report, okay? But among them, they are having an understanding and they know that you are looking for the best deal. So it's not counting against you to look for the best deal. But then, yes, please let me remind you that your credit report is being pulled by each lender, and it does hurt the scores. So you went to Ford, they pulled it. You went to Honda, they pulled it. And you went to Toyota, they pulled it. So what you can do is telling them, hey, put a note in my application or in your file, my file, that this is the score I started with. Because if I come back to you, we can do business here like that. Another thing that I am suggesting to a lot of consumers is that you pull your own credit reports, all 3 of them, and you walk in there and you say, this is what I have, what can we do? And if they can't work with you right there and then you can walk out. No lost love, okay? You can do that and you can try. They might not accept it, but you can try, all right? And if not, like I said, you're just looking for your best deal and don't have your credit reports pulled until you know that you have the car where the car is going to be that you want, you like. But yes, they do recognize that, but it does hurt us personally that they're pulling your credit report. Per each inquiry, you're dropping anywhere 3 to 5 points. Oh, it's going to get better. 3 to 5 points per inquiry. Why the gap? Because they're all different lenders and they don't work with the same formula. 3 to 5 points per inquiry. So the consumer statement, if you were not able to resolve your dispute favorably to you, you have the right to enter this statement. And the statement doesn't have to be a whole page. It doesn't have to be a paragraph. It can be one powerful sentence. That's all. You don't have to go in all this detail, especially if it was for medical reasons. You don't. Because of the HIPAA laws, it won't even be printed on your report. So don't go, if it was medical, just say medical. And the good, strong reasons will be medical, unemployment, reduction of income, and divorce. Yeah, I'm telling you because I had a class with college students, and the hand went up, and it says, Ms. Perez, if I put in there that I never received the bill, would that be good enough? And I said, no, you know that you have a bill coming, you should be looking for it, so don't enter it there. So yeah, those are the 4 powerful and strongest consideration. That right there, it gives you a chance to explain yourself. It doesn't guarantee that you will get the loan, but at least you're defending as to what happened. And not for them to think, oh, they don't care, or, we don't know. But again, it gives you a chance to explain, especially if you have paid on an account for 2 years. Good, 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 and all of a sudden, wow, you missed that payment, or something, or what happened there. So they will take that into consideration, okay? Now on the collections accounts. On collections, there's a lot of misunderstanding, and I've heard it. Okay, so a lot of people are worried that when the account sells from collector to collector, anywhere from 3 collections to 5 collectors, does that start a new activity date? No, it doesn't. No, it doesn't. It just gets confusing, and we have to track who is who, all right? So this is how it goes. When you are with your lender, they have about 90 days to collect on that, to bring you current, 90 days, or to have a payment plan. But if they don't hear from you, or if they don't have that promise, they send it out to collections. When the first collector calls you, your first question should be, are you working the account for Macy's, or did you buy the account from Macy's? That should be your first question. Because if they're working the account for Macy's, I would suggest that you jump back into Macy's, beg, plead, cry, throw a tantrum, and get that account back into Macy's. But if it's not, you from there on, that's where you start to deal with collectors. That's it. Macy's doesn't want to hear from us. Yes, ma'am. Are you working the account for that lender, or have you bought the account? Okay? And then, yes, the account can be sold because money is hard to collect. So they're giving at least 60 days to 90 days also those collectors. If they don't see anything from you or they can't find you, they sell your account again. Now, here's the kicker to it. Yes, it is very expensive to have credit. So every time that the account is being sold and transferred, the collectors are charging us anywhere from 15% to 20% of that balance owed. And everything should be paid. If you feel that you only owed $500 to Macy's and that's all you want to pay that collector, you will have a remaining $300, probably another $500 outstanding, and it will remain there if you don't have an arrangement, an agreed arrangement with that collector to have it forgiven. Okay? So now the thing about it, where does those 7 years that you've been hearing about, where does it start? Have y'all figured it out now? The 7 years, where does it start? Last day of activity. Date of last activity from the original lender. That's where your 7 years start. It is very important that you start looking for that because I get a lot of calls every day. Oh, Ms. Perez, it's been 10 years. No, it hasn't been 10 years if it's still sitting there. It hasn't. Pretty much it's a statute of limitation. It's a law, and it is removed by the credit bureaus. And that's why I want you to look at your credit reports because they're humans and they're mistakes. But if it has been the actual 7 years, then it should be dropped, gone, you won't see it. 7 years. The last payment done on the account. Yes, that's where your 7 years start. A lot of us think, oh my God, I still see it sitting there, and it's been 10 years. Please read the numbers, and then you'll be better informed now. Okay? So yes, it can be sold and resold and all that good stuff. When an account is in collections, please don't give them any more permission to debit the payments, your checking account information. Don't. It's already gone. The account is gone, and it's a profit to them. So they have to be patient to receive monthly payments from you. All right? Now, the other kicker to this, yes, is that, say, for example, I just told you 7 years it'll fall off. But here we're on the 6th year. They found you. Okay? And you're wondering, how did they find me? And that's what you're thinking. And they're talking at you. And one of those you can say, uh-huh, right. Well, they're asking for a payment arrangement from you or some kind of to pay back, right? And if you agree to that, when your first payment hits again your account, you're going to start activity all over again on that account. When your first payment hits. All right? So be very careful. Because you might have, you owe the money? Yes, the first thing we should pay back what we owe. We borrow it when we were in need and they lend it to us, we should be paying it. But depending on your situation, that don't put yourself in that place of another promise and then not follow through. And then when they get you on that 6th year and you said, uh-huh, and say, for example, they put you on a payment plan that is not actually affordable to you at that point, then you say, wow, what did I do? 2-3 months later and realize that it's a heavy payment, then you're going to stop paying it, but you started activity on that account again. You have started activity from that day when that payment hit. Mm-hmm. Yes. All right, so be very careful. Well, here lately also there's a lot of collectors coming out of the woodwork, especially because we're not educated and we don't know what we're doing and where they're coming from, okay? So the first thing when they call you, it is to say that you're not prepared to talk. Get their name and who they're calling from. And say, since you have my number, you will find me from here on, right? But tell you what, this is not the time to talk. Call me at 6 o'clock when I get home, okay? The next thing you're going to do is prepare yourself now to negotiate and get more information. You're going to get that person's name. You're going to get their extension, who they're calling from, and what are they collecting on. The second or third thing about it in there, you are going to ask for a statement. They must send you a statement within the first 5 days within the conversation started. If you don't receive a statement, 5 days. From the collector, a statement. You don't receive the statement, you don't know anything about it then. Then you're going to ask them for the collector tax ID. Collector tax ID. Once you have that collector tax ID, you can call the attorney generals, and then it is called the, for us, the personals, I'm sorry, just escaped me, the consumers line or consumers protections, and they can check on it and see if it's on the up and up, the ID, and if they can also collect in the state of Texas. Consumers departments, consumer protections departments for us. So that way you'll know that you're working with the right collector and that they have the account and a lot of things. Because a lot of us, like I said, it gets confusing after a while if they sold it 3 times, 5 times. And then again, if you don't know your statutes of limitations, you'll say, well, it's been 10 years. That's why, again, when you're pulling your credit reports, and if you're still seeing that account sitting there, pretty much it's good to stay there. So when this collector calls, it's like, yes, I have you on my report. If you don't see it on the report, it's like, where did you come from? Why? You see the difference? We're just not going to assume. We are going to be informed, and we're going to be ready to go. When working out settlements, paying less than what you owe, also be very careful. Get everything in writing, okay? Get everything in writing. And then the second part to this is that any savings of $600 and above they give us, I hate to use the word savings, but if they discount $600 and above, then be on the lookout for a 1099-C from IRS. 1099-C from IRS, that's earned income, voila. I didn't know I had that much coming, huh? You will be paying taxes on that. And here lately, if somebody's preparing your taxes, they'll have a little checklist of things that happen throughout the year, and one of those questions is that one. Do you have a 1099-C, or have you done a settlement with a collector or lender? 1099-C. And that's a very serious thing. Please don't ignore it, because then now you're dealing with IRS, okay? You can have it probably negotiated. It's not guaranteed, but if you don't speak, you won't be heard. You can negotiate it with the collector to say, I don't want it, or how can we go around it? You could, but get it in writing too, okay? All right, page 8 and 9. That right there is a sample of your credit report, and on page 9, it gives you all the answers to the letters and numbers that you're seeing on 8. Page 8 and 9, again, the answers are on page 9, but as you can see, it's a history. And they don't have to call us and verify anything or clarify anything. It's right there. Just for the sake of time, let me go over it, me, and telling you what I see. If this person was to come and try to get a loan today, will I give them a loan? I personally say no. Maybe some of you could put them on the second chance programs. Hey, if you have that kind of a program and plan, all right. This is why. Look at this. I'm on letter D. This person has an electronic department store, a bank, and a car. Number 1. Number 3. The first one is a joint authorized user and individual account. Number 5, the account has been reviewed for 36 months, 44 months, 24 months. And then I'm looking at 10. Oh man. Car payment past due 2 payments on 10. 11. 11 gets better. R1, I1, and I5. And your answers are on page 9, remember. So based on this, I would not give them the loan. Because on the car, which is the most priority account, he already is past due, and the shortest period of time, 24 months. Whereas for the electronic, it's a joint account. So this person might not have full responsibility on paying that account. The other person could be paying on it too. And the other one on the middle, it's an authorized user. He has no weight on that account. He's only authorized to be using the account. So you see how quickly they're making decisions? So that's, everything is so very important that you look as you're doing disputes, updates, and so on your reports, okay? Now, on letter C, look at that, how powerful the message is. That's your consumer statement. On letter C, I was injured on my job and could not make my car payment in 2010. A lot of information, period. One sentence. We didn't have to go into a paragraph, okay? And then letter B, don't confuse it with letter C. Letter B, it's an alert message in case there's identity theft. Would I give him the loan just based on that statement? Depending on the 3 C's, depending if I have a second chance program, it depends on a lot of things. It doesn't close the doors, but there's more. That's why there's competition out there. It's competition. One lender from another. They cannot work all the same, just like our fingers are not the same heights, because they offer different programs and plans. So you just got to keep trying. That's why there are different lenders. And that's where it comes a little confused to us consumers. It's like, well, I thought by having this, like I said, doors open up. No, it doesn't. They have to consider a lot of things. Now, here comes a question to you all. You've been hearing it a lot. Do I leave my accounts open or do I leave them closed, the ones you paid? I am so sorry. I am an expert too, but there's no right answer. It is you individually to decide that, because as you close accounts, you will be dragging down your credit scores, okay? And if you're not using credit, you're freezing your credit report. So that's why I need you to be familiar more and more with your credit history so you can make that decision. There's no right answer, and please don't learn it from each other. Even I, like I said, I'm standing here, but I'm not telling you to close the accounts. Yes, sir. Define freezing. In freezing, movement no more on the account. And then if you're looking to obtain the car loan in the future, maybe that can affect you negatively. And as you're closing them right now, it will not better the credit scores anywhere from 6 months to a year again, your credit report. If you have other accounts that you're making payments on, that will increase your credit scores again. For closing the account, it's the same effect, 3 to 5 points per account when you're closing them, okay? And as you make payments, it's also growing at the rate of 3 to 5 points, depending on the lender.
So if you have an account that you had for 20 years,
it won't be there. It won't be there, not unless you have not used credit whatsoever. When you see accounts 10 years and older, the credit bureau is kind of doing us a favor not to erase everything, because we have handled credit at one time, and they want to show for future credit granting that you have been responsible at one time and that you've had credit. So it's normally 10 years that they'll leave there something if it's been already not used. 10 years.
so it's our responsibility to clean it out.
Again, depending. If you have new credit, then yes, you can take the one that is 10 years or 20 years old. It shouldn't be 20. So you can remove that, okay? If you have new credit. If you don't have new credit, leave it alone. The utilities don't go on your credit report, not unless you close the account and they didn't pay the balance. Utilities. You can dispute the individual history, but if it's accurate, it will remain there. That's why these agencies that say that they're going to fix your credit, they're not successful, because it's accurate information. And it is best to dispute it through the credit bureau, because they will do it that way too. Yes. All right. Like I said, for closing and open, please Right now, as you're learning all of this, don't run home and do one or the other. What I suggest is based on the credit scores. And I'll walk you through the credit score here in a minute, what needs to be done, okay? Page 10, how to obtain your credit reports, free of charge. And this is not because we're giving this annual credit report business. This is because it's for us consumers. So we do recommend that you go to this site, page 10, free credit reports. So you can get it over the phone, online, or by mail, www.annualcreditreport.com. It comes from the actual credit bureaus, not a service provider, such as where you've been listening lately for free scores. So this is the actual credit bureau, okay? This site right here, yes, it does not provide you your credit scores, but you can purchase them. If you're going to purchase them, I do recommend to do so once again because it's from the credit bureau itself, okay? On page 11, it is to be prepared with the information they're going to need. All three credit bureaus, Experian, Equifax, and TransUnion. Experian is your most often used credit agency, Experian. And then when you're going to buy a house or a car, they're pulling all three credit bureaus, all three of them, a house or a car. And then depends on the lender, they're basing it on your mid number of score or your highest score. And sometimes, depending on your situation, they can also use internal formulas to come to a score that can assist you on getting that loan. The bureaus themselves, and ordering it through this site, it will not give you free credit scores. Will not. You have to purchase them. Either one. Through each individual bureau or this site, it will not give you free credit scores. They don't. Okay. And then on page 11, it tells you glossary to better understanding some of the words that are being used. On page 12, dispute process in case of errors. So a dispute, when you submit it, it takes up to 30 days for the bureau to do their findings. They will send you a letter letting you know it was done and corrected to your favor or non-favor. And from there, you will take action again and see if you need to continue to dispute. When it comes back into your credit report, that entry, it does not start a new date whatsoever. It comes back as the same when they took it out. That entry, that creditor, is removed from your credit report from 30 days upon investigation. Okay? Yes. And that's where some of these clinics are working on us. They're working on borrowed time. So they're looking at our credit report, knowing that they can say, okay, I fixed your issue, and here's the new report. And you'll, not knowing this information, you'll walk away and say, wow, they fixed it, huh? But when you go over and file again, apply for credit, it could show up again because it's yours. If it's yours, it will remain there, not unless you have all the right proofs and paperwork to say that this is not mine and remove it and so on. It will remove. Yes, sir. Yeah. Don't send it to all three of them if all three don't have your car loan to be disputed. It'll cause confusion. Yeah, just to the pertaining bureau, okay? Now we're going to get to the nitty-gritty of the scores, how they grow and how they're going to make you better and all this good stuff, your credit scores. So the credit scores, there are several components out there, such as the Vantage score, your Beacon score, and so on. The king of the hill is FICO. That's what they use out there, FICO credit scores. Okay? And then in the middle of the book is giving you the components as how your credit scores grow. As simple as that, and how much is the weight of it. So the very first one, you have 35% of payment history. Pay your bills on time. That's what's making your credit score grow. There's no way around it. There's no secret about it. It's just pay on time. And it's 35% of the weight. The second weight of it, 30%, is amount owed to all creditors. The balances that you carry on the account, especially on department stores or credit cards. Back in the day, 5 years ago, it used to be a window anywhere from 50 to 30% usage of line of credit. Here in the last 3 years, it's 30% or less. I know it doesn't seem like a lot, but it's 30% or less. So right now, we're looking less is best. The debit accounts don't have, they're not reported to the credit bureau. The Visa the Visa or the MasterCards, those are reported. But debit accounts don't report to the credit bureau, not unless you default and didn't pay that. 35 and 30 is 65% of the weight of your credit credit scores. Yes, 15% length of credit history. So that right there is going to take in consideration when the account was open and how it's being paid. Okay? The last 10% amount on new credit. New credit is considered anywhere from 6 months to a year, depending on the lender. New credit. If you got your MasterCard right now and you're paying on it 6 months, it's still new to some lenders. Some lenders will accept it. Some lenders will say you need to wait a year and then come back. 6 months to a year. The other 10% types of credit in use, a mixture of the accounts. Don't put all your eggs in one basket with department stores. Department stores, because those are easier to get? No. It holds different weight of the accounts. Having a mortgage, having a car loan, having a mixture of a department store, Visa, MasterCard. It has different weights to them. So as you can see right there, you come to 100% of the scores and how they grow for us. As you're making payments, your scores are growing. So if you have accounts with balances, per each account, that's what's giving you 3 to 5 points and adding to that number up there. So a decent, good starting score for us, it could be at 640. 640. Okay? Yes. The scores start ranging from FICO 300 to 850. Those are your actual credit scores. When you hear somebody bragging 900, it's like, okay, where's the new memo? Because I haven't received it yet. So credit scores range from 300 to 850. I repeated it twice because this is where it's going to come. A lot of your answers are going to, your questions are going to be answered. If you have that credit score of 600 and above right now, 640 and above right now, don't go home and clean house, please. Don't, because it's confusing, like I said, all this information right now. If you have 600 and below, go ahead and do your spring cleaning now. Go ahead and do disputes, close what you need to close, things like that, because it can only get better now. You're going to grow. But if you have a decent credit score right now, take one thing at a time, little by little, and start cleaning up like the personal information or close that account, old account, something. But don't do it all at once, you see? Because I do not know exactly what you have on your report, and you cannot just go home, like I said, and clean house at this point. Got it? So that's what help you to take a guide, that if you have 640 and above, that, okay, I'm all right, I can do probably a little movement. Your payments is what makes your credit score grow every month if you're making payments. Now, the thing about it, the lady over there is telling me that, you know, 500 line of credit has $300 making on payments. If you have more accounts in there and making payments, you're okay to pay one balance off at the end of the month. But what is it that makes your credit scores grow? It's your payments. So if you're paying it completely every month, you shut it down right there. The lenders are liking to see us in debt. So they need to see a little balance because, again, how you pay every month, it's the responsibility that you're paying every month, and at the same time, those payments are making your credit scores grow. You see that? I believe there's 2 credit cards that has to be paid in full, and that's by contract, and the lenders do, the ones that are knowledgeable and read the report right, they don't count it against you. FICO right now, like I said, is the king of the hill. They use more that one. Even though also, as they're using FICO, Vantage, and any other thing, internally, the lender can use a different total formula just to make us get us approved if they see something good and potential that that loan can be on the books and be sustained. Yeah, it's confusing, guys, as you can see, but please, we're taking a guideline. Now on page 14, how can I improve my credit scores? It's giving you some suggestions there. And finally, not to work, to be very careful and to avoid working with credit repair companies or We Fix It All. Because if they fix it all, then we will all be walking with pretty credit, right? Some other resources and numbers in there to assist you. And then that dispute form, so you can see that it's nothing much complicated, and it can be done. But please, do start taking baby steps on becoming familiar with your reports. Because as you can see, you think it's confusing, but once you just get it to your situation, and start working it, it'll be just as, you know, keeping track of your checkbook and balancing it out and so on. But here your credit report is being seen for a lot of different reasons now that you have to make it part of your finances and at least look at them, all three of them, once a year. Let's go into understanding money and credit. This right here is your personal finances, for your personal finances. The book itself on page 4 and 5 is giving you a pre-test and a post-test. And the answers that you will fill out is on page 38 on the back of the book, true or false. And once you get home, just go ahead and do it so you can see your knowledge, or it'll prompt you to think, I've never thought of that, or to how you view things financially. Just do it. And it has the before and after, okay? Now, I'm on page 6. Take control of your finances. As of today, please, you take control of your finances, not your finances controlling you. Seriously, that's what the finances are doing, and that's why we're always on that ongoing roller coaster. Because, say for example, on Friday, you did your list. I'm going to pay the car, buy groceries, get gas, blah, blah. By Wednesday, you have an emergency. And who takes over? Your emergency. And there goes your list out the window. So your finances are controlling you because you didn't stick to your guns and say, hey, this is what I got to do right now. Okay? And I'm going to help you also to get ready for those emergencies. There's no emergencies if we're not, because we call them emergencies because we're not prepared. That's why. All right? So you take control of your situation, and there's 5 basic steps on that page. So you're going to assess your financial situation. You're going to set financial goals. You're going to create a budget. You're going to use credit wisely and commit to a savings. So on page 7, another little test. And this one, the beauty of it, it has a scoring at the bottom. So it gives you a guideline, like where you at, what do I need to fix, where can I start, where is it? That's your guideline right there on that little test. Okay? On page 8, calculate your net worth. How many of you have done this at least once a year? Good. It needs to be done once a year. Twice a year, maybe, depending on the activity of the monies. But once a year. This is your eye-opener right here. We're walking around and talking to our coworkers or family. I don't know where my money is. I don't know where it went. I don't know. This right here, it guides you. So in assets, it's everything that is yours. No balance no more. It's yours and it has value to be sold again. Assets. And in liabilities, it's everything that still has a balance. You're still making payments. So you get that bill, look at the balance, and you fill it out quickly. So you answer those questions. In the assets, it's going to take you a minute longer, especially because you haven't done it before and you're just getting familiar, but believe me, it doesn't take long. So those are the assets. The beauty of it, in the bottom, you have side-by-side assets and liabilities, and then you'll see your result on the bottom. And that's where your situation is as of today. What is it that you own or still in debt? And then also the eye-opener as to what is the plan if you have a lot of liabilities, how to start digging yourself out of it. You're looking at it, you're visualizing. So right there you say, oh my God, I didn't realize that that $200 little balance, I've been lingering it there too long already. Maybe in 3 months, in 6 months, it's out. So this is that form right here. For every form, there's instructions in the book, but I just want to show you that within an hour, I'm going to cover it and how easy it can be, and don't be afraid to start, okay? Setting financial goals. That is good to have also, your financial goals. Just as you do your New Year's resolution, why not financial goals? My God, we work so hard, sacrifice time and money, and yet, you know, like you said, where did the money go? So there's short-term goals, long-term goals, and short, mid, and long, okay? So this family right here sitting down, planning a vacation within the next 12 months in a year. They're planning to spend $900. So within the year, they would have to be saving $12 a month in order to pay cash for that vacation. Be ready for it, okay? On page 10, this is right here so you can start looking at what are the needs and the wants. Very simple. We don't ask anymore, do I need it or do I want it? And prioritizing them, your needs and wants. And then on page 11, as you can see, there is a form for your financial goals. For every page, for every financial situation category, there is a form. Why? Because there's got to be a plan. The more planned that we are, better planned, the better that money will last in our pockets. Because we normally carry those numbers here on top of our head. In the morning, everything is peachy keen. It's pretty. But by the time we walk inside the door when we came back from work, oh my God, I'm broke. Right? So why do you even carry those numbers around? Write them down, put it aside. You know? It's not going to change matters. So write them down. So here's your goals. It has, yes, up to 4 blanks. Yes, because I don't want you to give up on your goals. I cannot help you and assist you. What are your goals? Because we all have different needs. Here, right now, probably we'll be ready to buy a car soon. Or someone will be ready to go on vacation. Someone will just want to have a washer, probably. I don't know. But you see, we write them down. On long-term goals, it will be something like helping your children with college, having a stronger retirement, a stronger savings, or downsizing, upsizing on a house. So those are the things you write down. Writing it down also, it makes it like a contract. It's like, oh my God, I'm not going to go back on my word. But if you're carrying them back here, like I said, in your head, oops, nobody knows about it. Right? So that's what we have. Now look on page 12 and 13, talking about insurances. Yes, insurance is so expensive. But you guys, do you know what you're insured for and why? You know? We walk into the insurance office and we let the agent, I need insurance. They say, we'll take care of you, no worries. You're just looking for a payment. That sounds good, $60, $80, right? And we walk out and they say, I got you covered, everything is insured. You have to know what is optional and what is required, okay? Say, for example, on your car insurance, they'll insure you for tow truck assistance, and roadside assistance, and rental car assistance. Do you need it? If you need it, please, do keep them, but those are optionals. If you don't, every dollar counts. Don't. So you have to ask, what am I being insured for? You know? So that's for the car. On the house insurance, please do have it adequately insured, and also for your homes that you're buying right now, do check on the insurance every year. Because again, we let it just sit there because it's insured. So say, for example, you bought this house 5 years ago at $80,000. And right now, this house is worth $120,000. Have you bumped out the coverage on that insurance ever since? I bet you not. And you have to, because if something was to happen to the house and you only have it insured for $80,000 and all of the fixings is going to go over the value, you are holding the bag. You're holding that bill to pay. So that's one of the things that you have to check on your insurances every year. Okay? Back into the car insurance. When is the last time you guys called your agent for a discount? Oh my God. I don't want to see that. If you're buying insurance every 6 months, if you're buying insurance once a year, the month before that insurance expires, you call your agent and say, hello, you remember me? What kind of a discount do you have for me? Seriously. Because if you don't ask, I don't hear the phone ringing, right? It hasn't. So they have discounts for us. Did you know that if you park your car inside the garage, if you have a house with a garage, you get a discount? Yeah, because it's not parked on the street, it's not going to be vandalized or stolen, so you're protecting your car. So don't let them tell you there's no discounts. And if there's no discount, say, wait a minute, I'm going to be shopping around, and I bet you $5 that in a minute they'll find discounts for you. For children also underage and having good grades. I mean, there's a lot of things.
Is it just the children, or what about?
I'm not sure, but discuss it with your agent and pick their brains. Seriously. Why not? I'm telling you, if you don't speak, you're not heard.
That's right.
Right?
That's right.
Ask away.
That's right.
If there's one that if you drive 20 miles a day, you get discounts too. I don't qualify for it. So health insurance, very expensive, and here lately there's no need to be uninsured, medically uninsured, because we have the health care reform, we have discount clinics, we have discount cards, we have many things. And you have to have some type of coverage, because if you're trying to make ends meet right now, and if you're not insured and something was to happen and get now a medical bill on top of everything else, it sets you 5 steps back. So please be insured. Life insurance, if you bought this life insurance again 5 years ago, you were a single person, you thought, hey, that worked for me, but now you're married, you have children, or your lifestyle has changed, that needs to be revised too. So have the best life insurance that works for you. There's so many programs now, plans with life insurance, such as cashback and loans you can take, or a saving type of a life insurance. I mean, there's so many things. You just got to ask and be informed and have the right product that you need, okay? All right. Page 14, 15, and probably, 16, it gives you instructions to the page, the worksheets you're going to use, and then which ones are you be using. That's what those pages are there for. On page 18 and 19, 18 and 19, record of your daily expenses, way on the top. This is a one worksheet right there. It has a number of 1 to 31 on the top, a full month. So this worksheet right here is not taking a vacation off, holiday off, or time off, as you can see. Why? Because we're still spending money, and it needs to be recorded for every dollar that we spend. Bless you. Now look how detailed. This is to keep record of your daily expenses. So the fixed expenses, hardly anything there, huh? Let me just backtrack. A true budget consists of 3 parts. Your fixed expenses, your variable expenses, and your periodic expenses. A true budget. Fixed, variable, and periodics. So fixed are payments that don't change throughout the months whatsoever. Car payment, mortgage payment, don't change. As you can see, very little line here, list. But look at your variables, how long of detail that list is. You see that? Well, that's because we need to be fair to each expense. Here, normally what we do is we have $100 for groceries. And out of that $100, we want to go out to eat. We want to buy the work lunch. We want to put gas in the car. and then whatever else is for groceries. No, you got to be fair to each expense. And then if not, because that's where always, normally we are shortchanging the groceries. You see? Look at that, for everything. Did you know right now to the T, how much you're spending on detergent? But you see, you say maybe $40 this month and maybe not $40 because I already have it from the other month and things like that. You got to be consistent with these expenses too. So here, this page is done for 3 months. Because on the first month, to get a better idea at the end of the third month, what is your estimated expense? So that way you'll be knowing that, hey, this is how much I spend. So on the first month, pretty much by the middle of the month, you're going to run out of money. You're going to get upset, throw the book at the wall, and say, that woman didn't know what she was talking about. And hopefully on the other next 2 months, you will have that better number there, okay? But look at that. It has to go so in detail. It has like food individually. Look at the food. Here it goes, our money goes really quickly. So say, for example, on groceries, you wanted to spend $400 a month. Groceries alone, okay? Because it all depends on the size of the family and on your needs of diet and things like that. This is just an example. Look, $400 on groceries, meals on the job, 2 meals on the job a week at $10 each. That's 10, 20, right? But how many weeks in 1 month? 20, 40, 60, $80. Okay? So now we have $480 on food. School lunches, I'm not going to go there right now. If you have it, do it. But let's not even go there. The last one would be dinners out, which means evenings and weekends, meals that us women say, I'm too tired, right? So let's do this example. Fridays, I don't cook. It's payday. I have money. Saturdays, I don't cook because I'm running out errands. I'm tired. No time for kitchen. Sundays, I don't cook. It's church day. It's a holy day. The kitchen hasn't seen me. And Monday, oh my God, what a stressful weekend. Not going to cook again. Okay? So let's put $20 each outing. 20, 40, 60, 80. 1 weekend. How many weekends? 4. 320. 320 to my 480, $800 in 1 month. Have I paid a sale or have I already borrowed money for gas? Probably. But you see how quickly I did 2 things. If you were paying attention, number 1, the numbers are low, $20 here and there, and how powerful it adds up to. Okay? Now, this is just me. If you guys have a family of 3 or 5, you're not eating on $20. You don't even get French fries with that burger, right? So do the math. Another thing I hear, oh, Ms. Perez, we don't eat that many times out. Okay. But again, the size of the family, or if you go out to a nice dinner, you spend it even probably on 1 or 2 of those outings. So you see, in the variables is what's weighing us down. The variables, because we let it go with the rhythm of the expense and we don't take control and say this is where it stops. This is where it's got to stop now. You don't have that control in the variables. You see that? How quickly your money gets away from you. Here with the gas prices, we always talk how expensive. But have we helped ourselves saying, I'm going to take a different route. I'm going to look for cheaper gas. I'm going to do less outings. No. We go with the rhythm of the expense again. I got to go. I got to put gas. I got to get going. But then we're also saying, oh, my God, how expensive it is. Yeah. So it's up to us. It doesn't matter if you're making $3,000 a month, where you're making $800 a month. The distribution of your monies and the control of it, it is up to us individually. You can have money left over. Like I tell my clients, I said, don't make me come over and do your budget because I can find that money that you are missing. So then right here you have for tracking credit card charges or your cash. Again, it's the eye-opener to see how much money is going where, if you actually have a habit of something going on and on and on, and where you want to do cutbacks. I know you're not going to carry the book throughout the day, but do start asking for receipts or write it on a piece of paper. 5 minutes at the end of the day, you'll have it all out, okay? Now the next page, page 22, 23. This right here is the 1 year progress to monitor. 1 year. So this right here, you're not going to be saying at New Year's, oh, I hope next year things get better. I don't want it to be next year. I want it to be next month. You have wasted so much money already, you cannot afford to keep wasting it, okay? So this is where it says actual, budget and actual. Budget, I'll get you in a minute. Budget, it will be the number you brought forward from the other page, page 19, I believe, or the other page. And then actual, it's going to be now that you are gathering receipts and writing it down, you're going to add them up, and that's the actual, what happened. So you do the comparison, and then the next month you better the situation. That's how it's going. Okay, now, in this one, we have the periodics. We haven't touched it yet. Very simple, too. Periodics, expenses that come due once a year, twice a year, maybe 3 times a year. Okay? And that's what we're calling it an emergency. I got an emergency. You know? The tax are due, can't buy that much groceries. Or the tax are due, I can't pay the whole cell phone yet. I'm going to shortchange groceries, change out the cell phone, maybe put more or less $10 of gas. My people, these are related expenses to the lifestyle that we have. So it is best to be prepared because it's not an emergency. So again, there's the list right there. This is how you do this part right here. Let's take the car repairs. So 1 good tune-up and 3 oil changes for the year, about $300 a year. 300 divided into 12, that will be $25 that you put into a side for a savings for that expense. Your tags and inspection, about 100 a year, 40, 60, something like that, 100. 100 divided into 12, that will be $8 a year, and that's what you put in aside. So when the expense comes in, guess what? You're halfway prepared, or you are prepared to get that money and pay for that expense. You have car repairs, you know that your car is on the last blink already. Don't wait for it to just wait and die there. Well, it will die, but then, hey, no worries because you have some money already put aside. You buy gifts throughout the year, Christmas, graduation, do you? Well, there's no surprise to it. Start making a list of the name of the people, how much you're going to spend in each person, add it up, divide, and that's what you get right there. So those are not surprises or emergencies, please. It is just how we are prepared with our finances, okay? All right. Page 24, yes, as elementary as it looks, we are not tracking how much we bring into the house. Your income. We have to, and if there's other sources of income in the house, track it also, because that is to better plan how that money is going to be spent. You know? Do you get a bonus? Do you get an overtime? Do you get money throughout the year? Plan it. Not only, like, here it goes, look, right now it's tax season. And boy, we were waiting for, like, we're going to get a little refund, right? But we are not planning it. We're thinking, oh, no, I'm going to fix the car. Oh, no, we got to fix this in the house. Oh, no, we want to go on vacation. We're having all of these thoughts in our heads, what we're going to do with that little paycheck. But when that paycheck goes into the checking account, it has a mind of its own and a different GPS. It went somewhere else south where you will not see it and enjoy it, right? But that is the best time also, look, not even for a split second that you say, oh my God, I'm going to save some money. We looked at every which way to spend that little check, but never to say, you know what, even $500 I should be saving right now. We spend it. So again, for every financial decision you're going to make and plan, there's a form to it. We should have learned this in high school or junior high, as you can see. The economy will be a lot better right now. But hey, there's never too late. We can always do baby steps and start. So yes, you're going to track your income right there. On the next page, it tells you that if you already started your budget and you're not balancing out what to cut back on, now look at the third bullet there. So if you were having a habit of spending $3 a day, every day for a whole year, $3, you're actually spending $1,000. $1,000, $3. If you were to be spending $5 right now in incidentals every day for a whole year, you're spending $1,800 and some change. The value of your $1, it has a lot of weight. Don't ever say it's just $1. You worked it. You know how hard you work for that $1. So don't ever say it's just $1. Look at it twice now. Should I let you go, baby? Right? So then it gives you other, such as entertainment, cable TV. In some of my classes, some people have shared with me that they're paying anywhere from $160 and $180 on cable. Ouch. Why? Like, how many channels does that thing come with? And some tell me, oh, 500, Ms. Perez. How many days in a year? So who's at home watching TV if you're sitting here today listening to me and you work 8 hours a day? Who's enjoying your cable right now? You know? So please think of things that you have in your home right now, and you can probably end up with a big old raise by the end of the day already. That raise that you're looking for. Yes. All right? Now, on page 26, budget does work. And budget will help you to increase your savings, to prevent impulsive spending, to decide what you can afford, identify expenses that can be reduced, and to repay your debt. That's what's the budget. The budget allocation at the bottom, a lot of people ask us too, so what can we guide our monies into percentages for each of the expense? So that's the suggested number right there. How do you arrive to that number? Let's take housing. It is recommended that 20% of your income is going into housing right now. 20%. So how do you arrive to that number? It's going to be the expense divided by the income, and your calculator will give you a number, and the number will be anything suggested in here. So let's say your house payment is $500. Your income is $1,000. Your calculator will show 50%. But what is the suggested number? 27%. So right there, there's a red light that you're paying too much rent or mortgage, and it needs to be worked down. Yes, sir. Net income, sir. We're doing baby steps here. The normal of your financial advisors advise you to save anywhere from 10 to 20%, normally 10%. And this is in personals, not investing. So even at this day right now, my next step was going to go into, I challenge you to start saving $1 a day as of today. $1. Because we got to do baby steps. Normally when we hear that 10%, it could be $50 per paycheck or $100 a month. And not knowing our personal situation, we feel like I can't do it. Or by the time you have it saved, you will draw it back out because you see money sitting there. So we have to start a habit of saving money, and $1 a day is like, I don't need it, I don't see it, then you bump it up in 90 days. I don't feel it, I don't need it, you bump it again as much as you can. So we're doing baby steps today because of the habits we have, and habit of savings is not one strong right now. So I do not throw those big numbers of financial advisors for saving retirement money or an actual savings account, because we got to start somewhere and not get discouraged. But you will work yourselves up. Yes, sir.
And plus, isn't it a good habit, like at that level, to take
Exactly.
Trying to deal with debt first, then going to the
You have to take a balance into all of it. Believe me, if you do a plan and written out, you will see monies at least allocated. It's not the adequate percentages at this time today because we're a little out of whack, all of us, but you're working towards making it perfect, right? Okay. Now, on page 27, this is about the credit. Credit is not bad. It's knowing when to use it and how to use it also. Credit. So it's going to give you a little test and also the answers, based on the answers, let you know where you at, how you feel about your credit, how you manage about the credit. So that way you'll know where to start, what needs to be fixing, if any, or making it better, okay? And then on page 28, using your credit wisely. Credit should be controlled, especially if you're thinking that the normal thinking is that to substitute or to help you extend your income. That's not the right answer, to use credit cards. Well, I don't have the money right now, but it's a great sale. I gotta have it today, you know? And then you're gonna use your credit card. Your thought should be, can I manage to pay it off or pay that monthly payment adequately when the bill comes? You see, we're not thinking of that. We have to turn it around now because we have some train of thinkings that is not healthy for us financial-wise. So money shouldn't be, credit cards should not be substituting by credit cards, because up till right now, I have not said, well, if you're running short, when you're gonna buy groceries, hey, get the credit card. No. Everything that I've mentioned, these are your personal living expenses. And for the most part, it should be covered within your income, not by substituting with a credit card. That's where problem starts. It snowballs on us. And when it's time to get out of debt, it is very expensive and hard to get control of the situation. So that's why make a plan, and then from there you'll start seeing where you're going financially. So it's telling you to avoid some of the credit dilemmas by making sure that, like I just said, do not use credit to substitute income and so on. And all of this information too is not a one-size-fits-all. This is the guideline, but you make it grow to the best. Take some of the pointers. I've seen you make notes because I feel that you are going to take something, incorporate it, and make a difference of what you're doing as of today and make changes. I know that changes are hard. It's difficult. And then the other thing that comes with it, believe me, it's discipline. It's discipline. Yes, ma'am. Again, payday loans, no bueno. Muy mal. Muy bueno. It hurts you. Believe me, if you have to, but you don't, because again, you're working on borrowed money. If you borrow $300 today because you're running short, what makes you think on your next payday you will have those $300 and then continue with your normal living expenses? You see? Again, that's a lot of education that we need to have in the community, that, like I said, credit is not bad. It's just knowing when to use it and how to use it. And that goes for payday loans, car loans, auto loans, things like that. Credit cards itself. It's just knowing when to use them. A lot of you, I know you're into that rewards thing right now. I can get into it too, but have you read the bottom line? It's like, you know, they have a lot of restrictions with those reward points. It's not even funny. I need another person to read it to me and put it in simple terms and say, oh, this is how you're going to use your rewards now. You know, it just gets out of hand.
If I could just offer a quick observation that might help. Like, for example, one of the things that helps me is, obviously most of us work for a living, right?
Right.
And obviously the way you pay yourself a salary is through saving and investing. Otherwise you're just paying your obligation, you're just paying debt.
You must.
The way to pay yourself a salary is to save and invest.
Mm-hmm.
So that's one way of kind of.
Yeah, I mean, you just got to think of something that will click and make you realize, like, oh my God, I've been doing this all along. And yes, the very first thing, pay ourselves. Have us something for savings, and like he said, even invest it at a later date. But yes, on page 29, you're going to list all of your credit card information there. That is going to be your eye opener, as I can see, to see how many you have, how much you're in debt, and actually the interest rates. A lot of people are not even familiar what the interest rate on the credit cards are. So say, for example, if you were to have at least, 3, 4 credit cards and interest rate of 21%, and each of them charging you anywhere from $20 to $50 a month in interest rate, how much money are you throwing away in a month? You know, let's put it at $20 each month. In 3 of them, that's $60 times 12. That's the beauty of it. We're not multiplying our dollar to see how much strength and growth it has at the end of the year. That's what needs to be seen. Page 30, that debt-to-income ratio, famous that we hear about, it's right there, the formula. Very simple to follow. It has what you need, the example, and the last one is your information, and at the bottom it tells you where you're at. Okay? Page 31, the cost of credit. Credit is expensive, as I mentioned before. This right here, a person borrow $1,000 with an interest rate of 16.9, making a minimum payment of $20. It will take them 7 years to pay off that $1,000, where if they pay $45, it will take them 2 years and 3 months. So read that one, please. Commit to a savings. Right here, savings. So in the savings, this is another thing that I need to share with you, because this is what we do. We put the money into a savings, and then the emergency comes, woof, we take it all out, and it stays clean for several months, maybe years, right? And we feel discouraged, like it took me 3 months to put $100 there. Within an hour, I drained it. Categorize your savings from here on. Put categories, and there's 3 of them to begin with. With your periodic expenses, you're going to have your emergency fund. But look at the explanation of the emergency fund. It doesn't mean because you forgot to save money to go on vacation. No. No. Emergency, it is for reduction of income, unemployment, or medical expenses. That's an emergency. That is a true emergency. And then the other one is for your goals. You see, you categorize it. You just have one savings account. But at home on a spreadsheet or on a piece of paper, you're going to have the categories and say, for example, you have $75 you're going to save. But the $75, $25 to each fund. $25. And that's where you're going to draw. So now you know you have $50 sitting there still and not have drawn everything out. You see that? It helps to see that savings keep growing. All right? And the last part, you have to communicate with family members around you. You have to let them know what's the plan. Because if you're going to go straight as an arrow and your family's going to pull you every which way, we're not getting there. You have to. And also, the beauty of it, please do talk to your children about finances. We're not learning this in school, as you can see. So please start teaching them at this time the value of that $1 and also to start the habit of a savings money. $1 a day. Tell them this is your allowance, but this is what's for. And make them safe. So communicate, control, cooperate. On page 34, internet resources in case you need additional assistance. On page 35, this is your personal information. It's nothing that I share with you. And with that, I am done with my presentation. I thank you for your time. I thank you for being here. And please do start the change today. Thank you so much. Good luck.